Equitable Savings Bank, a decade of excellent service in banking. Equitable Savings Bank was established in 1996 as a wholly owned subsidiary of Equitable PCI Bank. It was conceived as a neighborhood savings bank that would address the simple banking needs of the community, ranging from basic deposit products to car loans, housing loans, and small business loans. On July 17, 1996, ESB opens its first and main branch, Green Hills Ortigas Branch, along the busy thoroughfare of Ortigas Avenue in San Juan, manned by a lean complement of 2 officers, the branch manager and the operations officer, and the new accounts clerk, teller, and branch operations assistant. The branch initially offered just 2 products, a regular savings passbook account and a time deposit account. In December 1997, 17 months after the opening of its first branch, ESB undertook an aggressive branch expansion with the opening of its Mayon Moranto, Munoz Roosevelt, Pasig A. Mabini, and Farmers Cubao branches. Continuing on in 1998, 11 branches were rolled out, starting with Pasig Capitolio branch, quickly followed by Tandang Sora, Don A. Rosas Avenue, Cavite City, Pateros, Muntinlupa, Isidora Hills, Taytay Rizal, Concepcion Marikina, Xavierville, and Dapitan branches. These brought the branch network to 18 branches. The year 1999 saw the emergence of 5 more branches in Talipapa, Moonwalk Merville, Wilson Green Hills, Teachers Village, and Masinag Antipolo. 1 branch each opened in 2001 and 2003 in Shorthorn and BF Resort Las Piñas. In 2004, the Calentong branch was relocated to Alabang Hills, thereby completing the target branch network of 24 branches. By 2003, ESB had grown to 24 branches, most of which were based in Metro Manila. Even with its limited manpower, products, and branch network, ESB strived to deliver the excellent quality service which its parent bank, Equitable PCI Bank, was known for. Recognizing the inherent advantage of the savings bank franchise having lower intermediation costs due to its much lower reserve requirement compared to that of a commercial bank, Equitable PCI Bank repositioned ESB to be the consumer lending arm of the universal bank and mandated ESB not only to grow its consumer loans but also to expand its branch network nationwide to access cheaper funds, an opportunity that would redound to the best interests of the bank and its shareholders. In 2004, the leadership of ESB took on a different phase.
Good morning, Mr. David. Your mission, should you choose to accept it, is to lead ESB to become one of the top 5 savings banks in the country by the end of 2007 in terms of total resources, total loans, total deposits, deposit per branch, and net income. As usual, I have assembled your team members composed of Executive Vice President Jonathan C.B. Go and your point person, the reliable, meticulous and precise Assistant Vice President Marizel Arambulo. Good luck. This message will self-destruct in 5 seconds.
In order to achieve ESB's mission, President and Chief Executive Officer Ramon S. David set out the following objectives: to be the consumer lending arm and mass market banking champion of the Equitable PCI Bank Group, to provide the best possible selection of consumer loans for housing and automotive financing that would be quick to access, quick to process, and with affordable pricing, to provide a complete set of basic deposit, remittance, and payment products and services suitable to the mass market, which include the borrowing consumers and the youthful market, to be a least cost operator but reside in an IT-oriented and highly automated process environment, to continuously develop a highly trained and motivated workforce with a secure and stable employment and provide them with career growth opportunities. As before, ESB will continue to bank on the reputation, dominance, and stability of Equitable PCI Bank, but differentiate itself in terms of consumer and mass market client offerings. And to be able to fund the increasing consumer loan portfolio, ESB must expand the branch network to be able to access larger and cheaper funds from which the savings can be passed on to the consumer in the form of lower loan rates.